Welcome to our quarterly capsule. My name is Kareem Zakir. Unfortunately, Joseph-Antoine cannot be present during this capsule as he's on a well-deserved vacation and will be back soon. In this video, I will be addressing market events and where I think we're headed going forward. In addition, I will also discuss 5 important investment beliefs I have learned in the course of my investment career that will stand the test of time and make the difference between being a successful investor versus an unsuccessful one. So let's get started. The month of August, September, and October presented considerable challenges in both the stock market and the bond market. Notably, September lived up to its reputation as being the toughest month for stock investors. Now, although gold and oil has held up quite well during this period, the S&P 500 closed down the month of September 4.87%, marking its worst performance since December 2022. The Nasdaq also closed down 5.81% during the same period, and the TSX ended down 3.7%. As I have alluded to in our last capsule, this was likely to happen, so it should not come as a surprise to anyone. But by the same token, I see it as highly likely that money will pour back into the markets and help reverse the drop. Investor sentiment can be the primary factor for the drop in the markets in this period of time, as the central banks keep talking up interest rates and that inflation still needs to come down. In addition, the markets may have sensed a terrible geopolitical event back in September that we now know occurred on October the 7th. Remember, markets always look forward. Geopolitics does affect the markets in a very short term, but we must not lose sight that in the longer term, business profits and fundamentals is what drives stock prices higher. So, on a brighter note, we are now moving towards the best period historically speaking for being invested in stocks. Yes, November through May, and knowing that November, December, and January are particularly strong months from a seasonality perspective, this should encourage many to stay the course and not get scared out of these markets. My belief in investing over the years has always remained the same and steadfast. As long as we own quality investments and are properly diversified, then you are best served to always remain invested. Stick to your financial plan, because when markets turn up, it happens very rapidly, and you don't want to miss that. That's very critical. That's the best time to be earning your returns. A long enough time horizon is also your best hedge against market risks. I'm now going to share with you 5 important investment beliefs I've learned over my financial career. 1, I believe that self-control can make you far more money than just about any other trait as an investor. Now, I know plenty of intelligent people with incredible academic credentials who are just terrible investors because they lack the right temperament. 2, I also believe that being bullish or bearish matters a lot less than progress towards your goals. Your personal financial circumstances should dictate how you invest far more than what you think will happen in the markets. 3rd, I also believe that fighting the last war can get you into trouble. The next risk is rarely like the last risk. 4th, I believe that optimists make far better investors than pessimists. If you do not believe things are going to get better in the future, then what's the point of investing in the first place? Stay in cash, earn interest, and fall victim to the ever-rising cost of living and taxation. And lastly, someone once asked Jeff Bezos, by the way, for those who don't know who Jeff Bezos is, he's the founder of Amazon. They asked him, what was the best advice he had ever received from Warren Buffett, a very close friend of his and a very successful stock market investor himself? So Bezos asked Buffett, if his investment ideas and concepts are so simple and he's so rich as a result of it, why doesn't everyone copy him? And Buffett replied, because nobody wants to get rich slowly. In conclusion, I strongly urge you to ignore the market noise and the short-term volatility, and I know it's hard to do, but stick to your original investment plan. You will come out much wealthier in the long run. Now, if you're looking for advice or guidance, or know someone who does and can benefit from our services in wealth management, please feel free to reach out to us. On that note, I want to wish you happy holidays, and I will speak to you again in January. Bye.